Today I'm sharing 3 high growth stocks that I might be buying more of here in November. Now last month I posted 2 stocks to buy the dip on, and so far that has resulted in a nice 37% gain in Zora and 40% gain in PLBy. If you're new here, we're on the road to 200k subscribers, so make sure to subscribe for in-depth research on new stocks. And with that said, let's do it. My name is Matthew, and in this video we're doing some TA, reviewing some earnings, calculating NFT revenue, and looking at valuation. In today's video we're going to be talking about 3 small cap growth stocks, and I want to show you this first. I'm going to show you exactly what stocks we're talking about in a second, but this is the Russell 2000 or IWM. It's made up mostly of small caps and growth stocks, and you can see we've been trading sideways for pretty much the entire year of 2021, which is why a lot of your stocks may be underperforming. But now we've just broken out of this range after a whole year of trading sideways, and we could see small caps and growth stocks start to outperform the rest of the market, which is why I've been buying heavily into both small cap and growth, and it's what we're talking about today. So let's get into it. And I'm going to give you the 3 stocks we're talking about right up front. The first is Lending Club, ticker LC, then Playboy, ticker PLBy, and Callaway, ticker ELY. If you like seeing all the stocks right at the beginning of the video, make sure to let me know by smashing that like button, and we'll get right into the first stock, Callaway Golf, ticker ELY, because that's the one we've gone the longest without talking about. But first, a quick word from our sponsor of today's video, masterworks. You see, with stocks trading at their highest valuations since the dot-com bubble and inflation looking not too transitory, professional investors are looking for ways to significantly outperform the market and hedge against inflation. And by professional, I'm talking about guys like Larry Fink, who is the CEO of BlackRock, which is the world's largest asset manager. He recently called one asset class in particular the world's greatest store of wealth today. And the Wall Street Journal just called it one of the hottest markets on earth. So if you want to know what investment they're both talking about, you need to check out Masterworks. Masterworks lets you invest in fine art. That's the asset class that outpaced the S&P 500 by 174% from 1995 to 2020, has seen almost double the appreciation of real estate, gold, and 90% of cryptocurrencies during that same time, and according to Citibank, has the lowest correlation to the stock market of any major asset class and is shown to outperform during times of inflation. And what's amazing is that with Masterworks, you don't need tens of millions of dollars to invest in fine art. For example, I believe that this painting by Basquiat is going to appreciate nicely, so I've invested $500 into that painting, and I can either wait for it to be sold, or if I want to access my money earlier, I can sell my shares through the secondary market to someone else. If you want to take advantage and invest in some fine art, there is a wait list, but you can skip the wait list entirely if you use my link down in the description below, and it also really helps support the channel, so go check out Masterworks, and thank you Masterworks for sponsoring this video. Okay, now this stock is expected to report earnings literally right before I'm posting this video, so I have no idea how the stock will react. If it goes up, yay. If it doesn't, then maybe it's a buying opportunity. One thing to look out for is supply chain issues. This is something that has plagued Eli for the last few quarters, as well as many other companies. However, in their last earnings call, they made it very clear that they were able to mitigate a significant portion of the Q3 Vietnam supply chain disruption by shifting some production capacity to non-Vietnam suppliers. But just know that this is a mitigation, not an elimination of the problem. Because they sidestepped the supply chain issue, they actually received an upgrade from Compass Point from neutral to buy, with a price target of $33 per share. Anyways, the main thesis for Callaway, in my opinion, is Topgolf. It has been outperforming expectations, even the ones set by Callaway themselves. Remember, Topgolf venues only take a couple of years before they turn into cash cows. Callaway's acquisition of Topgolf makes sense because their legacy cash-generating business is able to fund and accelerate the growth of new Topgolf venues, which will soon have positive ROI due to attractive unit economics. It's also seen and expected to be a driver of EBITDA improvement for Callaway next year. According to this article here, it costs about $18 million to launch a new Topgolf venue, and it pays for itself within roughly 2 years. And Callaway often uses third-party financing and partners with well-capitalized REITs so that they don't have to fund the entire thing themselves, although they very well could and would if they have to. In the 10 months that Topgolf has officially contributed to Eli's financials, it's quickly approaching the 2019 full year 12-month levels of $1.06 billion in revenue. And in those same 10 months since March 8th of 2021, Topgolf is expected to deliver over $100 million in adjusted EBITDA. And don't forget about Top Tracer Technology as well, which as of October 2020 had achieved revenue growth of 233% over the previous 3 years and had about 7,500 bays with Top Tracer capabilities internationally. Now, since October 2020, about a year ago, they're on pace to double that number just this year alone by adding over 8,000 new bays in 2021. It'll be really exciting come Q2 of 2022 when we're able to get year-over-year comps for Topgolf and Toptracer and Topgolf Media within the Callaway business. In other news, Callaway made a strategic investment in 5-iron. I really like Callaway's investments into golf entertainment, golf tech, and golf lessons, which broadens their demographic and reach, and it brings a lot more newbie golfers into the Callaway ecosystem right when they pick up their first club. 5-iron is also a provider of golf lessons, so anyone starting to take the game more seriously might need a set of new, nicer clubs. There's also 10 locations as far as I know, 9 in the US, 3 being in New York, and 1 in Singapore. What's interesting is that Callaway made a similar strategic investment in Topgolf several years before they ended up acquiring them. So they were able to sit on the board, learn how the business works, and be confident that the acquisition would make sense. So don't be surprised if the same thing happens with 5-iron. And for technical analysis, I should really probably leave this to our technical analysis mentor, Kevin, who literally trades as his full-time job. But I'm confident enough in my TA to say that there is a strong support around the 26.60 range. And if earnings disappoint, that's probably the lowest it'll go in my opinion. Obviously not financial advice. Don't trade off of this and never try to play earnings. You'll never know what's going to happen. But I would expect it more to be in like the 28.50 range maybe. And if not, if we see a really great report, maybe we could see a breakout to the upside. So let's move on to the next stock. PLBy is the next stock in our video. And yes, I covered it in October. Yes, it's up 40% since then. And yes, I still think it's cheap. And Nick, our mentor from Investor Community, is going to help me prove that. Let me just pull up the recording of Nick's exclusive session on PLBy, only for Investor Community members. So he did a full deep dive into PLBy, digging into each and every line item. He ended up forming a conservative base and bullish case for Playboy based on expected growth rates, expenses, and valuation metrics. With a 4-year investment period, 25% growth, and PE of 17, PLBy offers 6% upside, which really is not much, but that's the low case, and it proves that there should be limited downside. And a price to sale of 5x, that's a return of about 108% over 4 years. The most bullish case would have to be 35% growth at a price to sales of 9, generating a theoretical upside of 488% over a 4-year investment horizon. Now, keep in mind, this analysis was made when PLBy was at a $1.2 billion market cap, and today it's about 1.3, 1.33, which is roughly a 10% jump in price. The lowest case also assumes that PLBy can maintain a growth rate of 25% for 4 years, which in itself could be speculative. But it has so many ways that it could do that. Renegotiation of licensing deals, expansion into China and India, Centerfold, their OnlyFans competitor that is launching in the next few months. This can also be a place for extremely organic integration of their sexual wellness products too. The continued success of their acquired brands such as Yandy.com, Honey Birdette, and Lovers. Their transformation to DTC channels or direct to consumer so they can capture more revenue. There are also rumors of potentially launching a new whiskey, which is just another part of their ecosystem that they're developing where 1,000 things can overlap. And of course, most recently, their Rabbitars NFTs, a project that I estimate has already generated $10.4 million in Q4 alone. Clearly what it comes down to is execution. For example, Centerfold is great, but it hasn't actually launched yet. Renegotiations of licensing deals is awesome, but they're not exactly wheeling and dealing right now. Rabbitars are fantastic, but it's nearly impossible to accurately predict where that could go. Instead, for their NFTs, I try and predict the least amount of revenue that they could contribute, and I just add that on top of their core business when I analyze this company. So here's what I have so far. You can screenshot it, pause the video, whatever you'd like, but essentially I'm estimating that PLBy will make about $10.8 million in revenue for Q4 from NFTs. In fiscal year 2022 is where it gets kind of crazy. There's a massive range that I've estimated between 2.7 and 37 million in revenue for 2022 from NFTs alone. And that range is why it's not even worth trying to make projections. Rather, just project the most conservative case, which here would be 2.7 million in revenue from NFTs for the full year 2022. That's because variables include the price of Ethereum, trading volume, average sale price, rarity of Rabbitars. The project right now has no roadmap. Are there follow-on projects like, I don't know, Space Rabbitars that could mint and generate another 10 million in revenue? Nobody knows this stuff. But what I do know is that you also have to be aware of the fact that the Rabbitars can complement other areas of their business. For example, as a marketing tool. I'm already seeing merch that's worn by the Rabbitars be the best sellers on Playboys.com's websites for men. So there's a white and black hoodie. You see there's the black hoodie, there's the white hoodie that you just saw here. There's the sailor hat and the pipe. And guess what? There's the sailor hat and there's the pipe. So there's a reason that these specific items are best sellers right now. It's the NFTs. Now, in terms of TA, I actually think the bottom is in for PLBy. Most people might have been able to guess that, but we bottomed right around here, and then we started to break out to the upside out of this pattern, and we've established a higher high and a higher low, and now we're in the process of building a nice uptrend. We also can see that the moving averages were previously all pointing downwards are starting to point up again. Prices above all those moving averages. Now just keep in mind we do have a volatility event coming up with earnings in just a few days here, so keep that in mind when you are looking at your position. And also shout out to Mentor Kevin for pointing out this breakout here with a quick video for investor community. Everyone who got in there is up about 7 or 8%, so that's pretty solid. Finally, Lending Club. I've already done 2 videos on this stock pretty recently, so this part's going to be short, sweet, and to the point. Their business model just makes a lot of sense, and it's going to be highly profitable in my opinion. They use their risk model to source and originate loans, and then they keep about 20% of them on their own balance sheet, which they're able to do because they're a bank, and keeping those loans on their balance sheet is 3 times more profitable than selling it to an investor on their marketplace. The stock is still very cheap when compared to its peers, despite having similar tech, similar growth rates, and the huge advantage of being its own bank and having recurring net interest income. And yeah, I know it's been on this insane run for most of the year. It's up like over 300%, but what do we always say? Just because the stock has gone up doesn't mean it's overvalued. I just showed you the comps table, and it is so obviously cheaper compared to the other fintechs. Now, maybe that just means that the other fintechs are way overvalued, but I think it's somewhere in the middle where they're going to come together, and we're already starting to see that since my first video on LC. Now, if we look a bit closer on the daily chart, we can see that it might be forming sort of like a bull flag or maybe a bull pennant. This broke through this morning, so maybe I have to get rid of this one, but I added a bit here this morning actually, and I'm almost done building my position, so I'm pretty happy with that, and I am long LC. If you guys didn't already know, you can check out my other videos if you'd like to get more detail on my thesis. And by the way, these are 3 of my positions in all 3 stocks mentioned in this video for full transparency. And make sure to check out Masterworks if you want to invest in fine art, a game previously reserved for the ultra wealthy, and skip the wait list by using my link in the description. Subscribe.